All right, good afternoon, everyone. Clearly, you can all see that I'm in an open position right now. Let me pop on the executions. I'm going to review this entire thing. Decided to do a little bit of solo trading. It's been a while since I've done that, and not exactly the type of price action I would endorse, especially for newer traders to try to take a swing at. But there were definitely some signatures to be mentioned here. So you're going to take a look here, and you're going to see I bought two contracts here. Okay, partialed out right here at 561, and then I actually pyramid entry right here within this Fairway gap heading into 1:30 p.m. kill zone, and then ultimately took another partial here above this buy side liquidity high, the lunch high. All right, so two partials taken there, and then I have the runner held up for what we're drawing towards on that daily chart. We have this rejection block, okay, on the daily chart. This is what we're drawing toward. The bulk of the liquidity resides above this body right here. So this here is a daily premium array, and this is going to be our first target on the daily time frame. Above that, obviously I have this eyeball here. We have a buy side liquidity pool above the August high, okay? But I don't really need that. I'm just holding my runner for that rejection block. That's that near term daily draw on liquidity. Now, let's go down to the 5-minute chart. So first of all, just for getting everything out there and showing you guys transparency's sake, I actually took a long right here, okay, and you're gonna notice I took a long here, I took a long right here, and then got stopped out, not stopped out, but I took it off a break even just so I can get better positioning. So I longed it here and rolled the whole way up to new week opening gap, and then ultimately came back down. My stop was trailed up in profit, and it hits it right here at 556. Okay, and then I was beginning to speculate some type of sell program manifesting, so I shorted it here, and ultimately got stopped out at 3 handles. Okay, right there. And then here is the business with this here. So we long 2 contracts here, pyramid entry, holding the runner, getting ready to run into that short-term buy side here. So let's overview this. Okay, but as we can see here, we run down prior to what? The 1250 to 110 macro. We run down and we take this sell side liquidity pool. Why is this important? Well, it's very obvious to see that we have very apparent bullish order flow underway in the marketplace here, right? What I'm seeing once we drop down here is we have generated lunchtime buy side liquidity. Okay, it's a little bit outside of lunch, but we have these relative lows here on price, and it drops down, takes those stops, and then if we go to NASDAQ, okay, you're going to see the same thing. These relative lows ran. We trade to the low end of a balanced price range on the left side of the chart. And then following this raid on sell side liquidity here, we also notice that we actually drop down into the new week opening gap low. So fair value slash the support level is being touched. We have sell stops ran, and then we come down, we create an intermediate term low heading into what? Because I'm respecting the overall bullish order flow and understanding the draw on liquidity on the daily chart, which I already showed you guys, the rejection block and the high, because I know where the draw is on the daily chart, and obviously it's showing no signs of slowing down here, we head into a macro and we have sell stops ran, okay, our classic time-based liquidity pool, which is lunch liquidity. We create an intermediate term low, failure swing, and this here is going to be an OTE, right, from here to here, okay, 60%, and then we come up off of that, retrace back down into something very specific, and I'm going to show you that on the 5-minute chart. So if you take a look here, you're going to notice we have midpoint of the wick delivered. So we're drawing back down in the new week opening gap low again. We have a midpoint of the wick, and that's where I'm taking the long position. And then for the pyramid, we understand we come up. We now have a market structure shift above this swing high here, okay? And then we have this inversion gap that we're referencing. So if we go back down to the 1-minute chart again, okay, we're going to see us drop down to the inversion gap and the 1-minute gap here. Now, we have buy side liquidity up here. What buy side liquidity pool? Well, this here is going to be our classic previous hour high. And when we're bullish, we know that previous hour high serves as a very important buy side liquidity pool. A lot of people are trying to catch the reversal off this expansion here, right? However, looking at it, we understand that this drop down was just to induce traders to get short, and we're taking lunchtime sells of liquidity to continue the buy program towards what? The daily draw on liquidity in the form of the rejection block. Now, disclaimer, I'm sitting here saying, this lowest trader into getting short. Okay, I was longing it here, all the way up, rode it, and ultimately let's see here, just about 10 handles of a profit trade right there, okay? I got caught up with that, and I tried shorting it here, and then I lost 2 handles, so we're up about 8 handles now, right? Okay, now I'm shifting my mindset and understanding, okay, I'm wrong, let me reevaluate. And this is what I got. We're heading into the macro, market structure, suggestion bullishness, trading into a key level in the form of new week opening gap low. Sell stops ran. Okay. Market structure shift here, back down to a volume imbalance, and the midpoint, coming up off of the midpoint of that 5-minute wick, that's where we're buying. Okay, one here and one here. And we shift up. What are we doing? We're closing above that opposing 5-minute inefficiency. Okay, and then we retrace back down into this imbalance here. That's another buying opportunity, a pyramid. So from this contract here, we're taking a partial up here while we're pyramiding up here, right? And then take another portion off here. And the trader's already paid. So if my runner hits, it doesn't matter because guess what? We've already profited multiple times here, okay? So we're holding the runner up